Forrest Gump made $700 million at the box office, against a $55 million budget. According to Paramount Pictures, it lost money. Harry Potter and the Order of the Phoenix made $940 million worldwide, against a $150 million budget. According to Warner Brothers, it lost $167 million. The Lord of the Rings trilogy made nearly $3 billion. Peter Jackson, the director, sued New Line Cinema because, according to the studio's books, the trilogy made horrendous losses. No profit at all. This is not a coincidence. It is not a mistake. It is not even illegal. It is a system perfected over decades, specifically designed to ensure that certain people never see a dollar of the billions of dollars their work generates. Today, we are going to expose exactly how Hollywood accounting works, who designed it and why, and the 3 financial lessons it teaches about how money actually moves through powerful industries that apply far beyond the film business. Here is why this is not just a story about actors not getting paid. A screenwriter named Ed Solomon wrote Men in Black. The film grossed over $500 million at the box office. It spawned multiple sequels, merchandise, video games, and theme park attractions. He had a 5% net profit deal in his contract. His total payment from net profits across every film he wrote that generated over $2 billion in combined revenue? $0. He said publicly, "Not one of the films I wrote is in profit, according to studio accounting, even though they spawned multiple sequels." Stan Lee, the co-creator of Spider-Man, had a contract giving him 10% of the net profits of anything based on his characters. Spider-Man made over $800 million in revenue. According to the producers, it showed no net profit on paper. Stan Lee received nothing from the deal. He sued. The case was settled for $10 million, a fraction of what his contract should have generated. This is not a bug in the Hollywood system. It is the feature that the system was built around. And understanding how it works teaches you something about financial power that goes far beyond the entertainment industry. Here is exactly how Hollywood accounting works. And once you understand it, you will never look at a box office number the same way again. When a studio makes a movie, it does not simply spend money and collect revenue. It creates a separate corporation for every film it produces. That separate corporation, let us call it Filmco, exists for one purpose: to make sure that no matter how much money the movie makes, Filmco itself never shows a profit on paper. Here is how they do it. Filmco needs the film distributed to cinemas. So the parent studio, which owns Filmco, charges Filmco a distribution fee, not a real cost, not what distribution actually costs. An arbitrary fee set internally at whatever level guarantees that Filmco's books never turn positive. For Harry Potter and the Order of the Phoenix, Warner Brothers charged Filmco $212 million in distribution fees. $212 million. Essentially, Warner Brothers paid itself $212 million to distribute its own movie, and recorded it as an expense on Filmco's books. Remember those numbers from the beginning of this video? Forrest Gump losing money, Harry Potter losing $167 million? Now you know the mechanism. The distribution fee alone on Harry Potter was larger than the entire production budget, before a single other expense was added. On top of distribution fees, studios layer additional charges: marketing fees, overhead allocations, interest on money the studio loaned to its own subsidiary. all charged at internally determined rates, all recorded as expenses on Filmco's books, none requiring actual money to leave the parent company's hands. The court that examined the Alien accounting, the 1979 science fiction film that made $475 million in today's dollars on a $32.5 million budget, found that the studio's formula was designed to make net profit mathematically impossible. Not improbable, mathematically impossible. The movie was structured so that regardless of how much money it made, Filmco would always show a loss. And here's the part that makes this legally defensible, which is perhaps the most important detail of all. Every person who signed a net profit deal signed a contract that defined net profit using the studio's own formula. That formula, buried in hundreds of pages of legal language, included all the internal charges. The signatories agreed to it. Most of them had no idea what they were agreeing to. Name the legal reality and the human cost. Here's why Hollywood accounting, despite everything it does, has never been made illegal. Net profit in Hollywood is not the same as net profit under generally accepted accounting principles, the standard rules every other U.S. company follows. It is a contractually defined term, a bonus pool, as one accounting expert explained, that the studio defines in the contract itself. The studios are not lying about their numbers. They are using numbers defined by a contract that both parties signed. The problem is not that the studios break the law. It is that the law has never required them to use the same definition of profit that every other industry uses. Who does this hurt? Writers, directors with profit participation deals, actors who accepted lower upfront fees in exchange for back-end points, original creators who licensed their intellectual property for a percentage of net profits, production companies that partnered with studios expecting to share in success. Ed Solomon, Stan Lee, Peter Jackson, the Tolkien estate, the creators of The Walking Dead, who sued AMC and settled for $200 million. Michael Moore, whose Fahrenheit 9/11 made $222 million against a $6 million budget and was declared unprofitable. The advice every entertainment lawyer gives their client before signing any deal with a major studio is the same 4 words: never take net points. Always take gross, a percentage of gross revenue. Total ticket sales before any expenses cannot be manipulated by internal charges. A percentage of net profit can be reduced to 0 no matter how successful the film becomes. The people powerful enough to demand gross participation, the A-list stars, the directors whose name alone guarantees a green light, protect themselves from the system. Everyone below that level signs the net profit deal and hopes for the best. That hope is almost never rewarded. Here are 3 specific financial lessons from Hollywood accounting that apply to every negotiation, every contract, and every investment decision you will ever make. Lesson 1. The definition of profit in any agreement is the most important thing you will ever negotiate, and it should never be left to the other party to define. Hollywood's entire system depends on writers, actors, and creators signing contracts where the studio defines what profit means. Once you sign that definition, you are legally bound to it, regardless of how unjust the outcome. In your own financial life, this applies to every contract where your compensation depends on a calculation you did not design. Employment contracts, partnership agreements, investment structures, revenue sharing deals. Always understand exactly how the number that determines your payment is calculated, before you sign. Never assume it means what the word normally means. Lesson 2. The entity that controls the accounting controls the outcome, regardless of the underlying economic reality. Warner Brothers made hundreds of millions of dollars on Harry Potter. Film Co. lost $167 million. Both statements are simultaneously true, because Warner Brothers controls the accounting and Film Co. is a subsidiary it created. In personal finance terms, this is why understanding where reported numbers come from matters more than trusting the headline. Company earnings reports, fund performance numbers, real estate returns, all are calculated using methods that the reporting entity controls. The question to always ask is who defines these numbers, and what incentive do they have to define them the way they do? Lesson 3, and this is the one that directly protects your own financial interests. Never accept a payment structure based on net when you can negotiate one based on gross. This principle is as old as Hollywood's accounting system itself. Gross revenue cannot be manipulated by overhead allocations, internal fees, or distribution charges. Net profit can be reduced to zero through legitimate bookkeeping, no matter how large the gross revenue is. In practice, this means preferring salary over profit sharing, where you lack leverage, revenue share over net income share in partnership deals, dividend income over capital gains distributions from vehicles with complex fee structures. The closer your payment is to the top of the revenue waterfall, the less exposure you have to the expenses that sit below it. The films in this video were not failures. They were among the most successful entertainment products in human history. The people who deserve to share in that success mostly did not. Not because they were cheated in the traditional sense, because they signed contracts they did not fully understand, with definitions of profit written by the party that had every financial incentive to ensure that profit never materialized. Understanding that system, in Hollywood and in every other industry where it operates in different forms, is one of the most valuable financial lessons available. Here is what Hollywood's accounting system actually does. Studios create a separate corporation for every film, designed to never show a profit on paper. They charge that corporation arbitrary distribution fees, overhead allocations, and internal interest, all at levels they set themselves, reducing net profit to zero, regardless of box office success. Forrest Gump, Harry Potter, The Lord of the Rings, Spider-Man, Bohemian Rhapsody, all officially unprofitable, all generating billions in revenue for the parent studios that controlled the accounting. 3 lessons. The definition of profit in any contract is the most important thing you will ever negotiate. The entity that controls the accounting controls the outcome. And never accept a payment based on net when you can negotiate one based on gross. Hollywood makes billions every year. The people who create the films that generate those billions largely do not. The system was not designed by accident. If this video exposed something about how money really moves through powerful industries, hit that subscribe button. Every week on First Million Club, we pull back the curtain on exactly these kinds of financial systems, so the fine print stops making decisions for you.